Welcome to the CodCast. I'm Chris.
And I'm Matt. So, Chris, you are just back, first day back in the office from RIU in Sydney?
Yep, got back very late last night after the 3-day conference.
How was it? How was the feel?
Yeah, interesting. I mean, it was pretty busy, a lot of the usual suspects, but actually a lot of activity, a lot of shareholders. And again, to those shareholders and future shareholders who came along to the booth and said hi, and amazing how many people mentioned the CodCast. I'm always really surprised. But thank you, and it was lovely to see you. We actually love it when people come down and say hello, so thank you for that.
I obviously didn't get a chance to come along this year. I was here looking at metallurgy results and things, but what was the sense on the commodities at the moment? Like, are we happier about copper and cobalt than maybe we have been in the past?
Yeah, I mean, obviously gold is still flavour of the time. Gold is an unusual commodity because it's not really driven by industrial use or anything like that. Copper, still overwhelmingly, I mean, people talk, I guess it's a bit of bias here as well because people wouldn't talk to me about rare earths, but, people are very much looking for copper and very interested in copper projects. And I think there's a lot of positivity. The other one is cobalt, which I think the last couple of years, DRC has been one company in particular, but DRC is running very hot on cobalt, 43% increase in the price since the start of the year. We can see with increasing deglobalization and risk issues, just how we need supplies of this. And people, I guess it was like, wow, you have 1,300 tons per annum of potential supply out of South Australia. So instead of being, cobalt, it was very much, wow, okay, cobalt. And then I'm off to the World Cobalt Congress on Sunday.
That'll be really interesting, actually, to see to hear, I guess. I'm not joining you again, but how the cobalt experts are sort of seeing the market unfolding and what they're predicting. Before you went, and anyone who's seen the speech, it's on RIU's YouTube.
It's on ours.
It's on ours as well.
Get our viewers' numbers up. It's on both. And it will be appended to this video as well.
Well, anyone who has seen it will have noted that it was a slightly different emphasis in the speech this time than previous speeches you've given. And one part that I know we worked on in advance of you going over there that maybe didn't fully get into the speech that answers that question a little bit was some work we did looking back at the cohort who presented a year ago and assessing how they went and what actually drove success.
Yeah, well, I mean, we have a hypothesis. I have a hypothesis, which is I really like development stage projects. Why? It's been found. You've got independent reports and competent person sign-offs and verifications of documents, and I like that because you're taking a much more calculated investment approach. And our friend Pierre Lasonde, who kind of gave us the Lasonde Curve, which I'll edit in here, but effectively describes that excitement during exploration, and then the fall off, the valley of death, or the orphan period, as they call it. And my view is that when you climb the other side of that, especially as a study specialist who sees the values of studies, execution of a bad study, however good, is always going to be a bad outcome. And so the value of studies and the value of moving through that. And I said, well, can we find data to support this? And the funny thing is, I don't think I did a very good job on stage because the three of us hadn't had a proper conversation about the data until this morning, as we were saying, well, what could we have done better in the speech? So, I mean, to get into that data a bit more, right, we talked on speech about there was, about a dozen companies out of the 92 that doubled the money last year. So overall, if you invested $100,000 across all of them, you'd have $115,000 a day. Who cares, right? I mean, 15% return isn't bad, but it isn't why we're doing sort of...
It's not why you get to this end of the market.
It really isn't. Any end of the exploration and mining industry, really, other than maybe the top 5 or so. And so, people looking for the 10-baggers. So, well, the 10-bagger has to come from exploration, doesn't it?
Oh, apparently not.
Apparently not. No, that was Lavrada Resources, 11.7 times, 1,171% increase in the share price from RIU Sydney 2024 to 2025.
And they got that off PFS and a DFS. It's a pure development story.
Absolutely. Dozen or so companies. Only 3 were driven by, only 2 were driven by pure exploration discovery, as in new greenfields discovery. one already a reasonably advanced company at sort of Coda stage-ish with the main project, but then had quite a lot of advanced discovery as well.
Yeah.
No prizes for guessing the commodity of most of these.
Vast majority are gold. And,
Yeah.
And I think Lavroto's gold antimony, right? So they benefited a bit from that as well. But even in gold, you look at them and these are companies that are growing their share price on studies, on MET results, on government approvals, environmental things coming through for them. It's development stage milestones that take companies from high risk, high reward to low risk, high reward.
Yeah.
And, reducing the risk, maintain the reward, share price goes up.
Yeah.
It's not a complicated formula when you think about it, but people don't maybe necessarily think about it when what they're interested in are the big news-making drill results and discoveries that you remember for years and years, but which aren't necessarily driving the sustained share price increases.
Yeah, I mean, again, 92 companies, only a dozen kind of more than doubling the money, average return of 15%, which is really not great. And the data overwhelmingly supports that the development stage companies were driving that this year. Now, we're going to do more on this. I mean, this was a bit of fun, right? We have day jobs, but we'll do a lot more on data crunching. I think I've got the bug for it now. I want to know more. So, maybe if we crunch more data, it'll change the story a bit. Maybe the next year will change the story. Yeah. It's a cyclical industry. But the one thing I can say with complete, total certainty based on the data we crunched and did it accurately from the 92 presenting last year at RIU was that, the big driver of shareholder value was companies in the right commodity at the right time advancing their projects through studies. The one copper company was Rex.
Our neighbour, effectively.
Our neighbour, very comparable planned production, comparable net present values. They used a 4.8% discount rate, which was a bit naughty, and one could argue that. But, decent project, very comparable to Coda in production and economic metrics, much more advanced.
And that's what I suppose we probably should have known all along is why, how do you bring this back to Coda? Like how do you compare those 92 companies and the outcomes that they had to Coda and what maybe an intelligent investor could think about Coda's potential outcomes?
Yeah, I mean, timing is linear, right? So the reason Rex was so advanced is they spent more than a decade at the stage that Coda is now, right through that sort of challenging copper thing, and brought a new management team in who then made a lot of changes. We are obviously a much newer, much younger company. We've only been listed 4 and a bit years. We've only had a JORC resource since late 2021, early 2022. So we've really advanced very, very quickly in that time. We sort of covered, 2 or 3 times as much ground in the time we've been around. But how do we advance that further, right? So we talked about the net present value. There are discounts. We're trading at about 2% of our net present value. So a few people asked what I meant by that. The net present value of the project is what the project should be worth at the point you make the investment decision, including the return of capital, the cost of that capital, and a risk factor. That's your discount rate. And you always have a discount at this stage.
Of course.
It's usually around 80-90% scoping study to PFS.
And that basically is the market hedging the possibility that you're not going to actually ultimately produce, or not going to produce to the level that you suspected you would in your studies.
So it's 3 risks, right? You've got funding risk, which is kind of a dilution risk as well. And that's a big factor. You've got technical risk. Will this work, and will it produce the economics that companies plan or say they will? And we know, and especially in gold for some reason, often that does go south. And then the third one is your actual risk of this thing being a mine because of what I call the intangibles, but it's probably a misnomer, but environment, heritage, approvals, water, location. So I think you were saying what you felt I didn't articulate perfectly.
Yeah. I guess what I would have really liked to have seen made maybe a bit more emphatic was the degree to which a lot of those risks, I don't want to say don't apply to Coda, but maybe apply less to Elizabeth Creek than some of our peers.
Yeah, and what we're doing to make sure that through diligent work and through good technical expertise, we're minimising those risks.
And as those risks fall away or are
Reduced.
perceived by the market to be less severe, which might simply be a matter of explaining and making it clear to people what is actually in front of us in things like the regulatory domain or the heritage domain, what that's going to do to the share price, or at least what that has the potential to do to the share price.
Yeah, exactly. What you're trying to do is remove that risk discount so that the discount to MPV goes from 98% to 95% to 90%. And mathematically going from 98% to 90%, which isn't a particularly large removal of discount, is mathematically, well, it puts you in those 10, 11 companies from RIU that did the best. Puts you in the best performing decile by far. And that shouldn't be impossible, shouldn't be too difficult. Yeah. The data we crunched from RIU 2024 to 2025 overwhelmingly supports the hypothesis that development stage companies that de-risk well, and you need a bit of macro favor going your way. And again, copper's holding up very well. The forecasts remain very strong. Cobalt's increased nearly 50% since the start of the year in its spot price. The magic happens then.
And I guess people can judge the speech for themselves. We'll append it onto the end of this CodCast and I think pop it into our own feed as well. Yeah,
and feedback always welcome. As you can see, Matt's given his candid feedback, and just part of what we're trying to do, which is always improve. If you're a shareholder, I think it behooves us to promote the company well for you and to try and do that better.
All right, well, that should give people plenty to look forward to, and we'll be back talking again in the not too distant.
Yep.
All right, well, thank you very much.
Thank you very much, and thanks if you came down to RIU Sydney. If you didn't, videos are up and or will be up very soon. And again, thank you for support. Thanks.
Thank you very much, Chrissy, and always a pleasure to speak here, and good afternoon to everyone. I think it's my fourth time speaking here, and it's always a great chance to reflect on what we've done over the past year. And again, what I'm going to do today, rather than the sort of CEO data dump, I have no idea why this is advancing forwards. Technical gremlins, here we go. Rather than do this standard CEO data dump, what I'm going to do is really talk a little bit more about the context that Coda finds itself in. Talk about the market. We've just heard from Nick, my copper brother in arms. Quite similar project in many ways, very different location. But I'm really going to make a case for the development stage projects today. I'm going to talk a little bit about how we find ourselves, what the market's doing, and hopefully, if I do my job well today, I'll articulate to you better than I have before why this project is so compelling, beyond the standard slides of team management, location, and why I believe this is the sweet spot for investing at the moment. We usually do things a little bit differently. As I say, the main reason is we have a huge social media presence. You can hear from our podcast. You can hear on our codaminerals.com/updates. You can see our commercial manager, Katrina. You can see our exploration manager. You can get the detail behind this. So again, what I'm going to do today is to walk you through some very quick, so the next 5 minutes or so, just an introduction to Coda, and then talk much more to why the investment proposition is what it is. We've been listed about 4 years now, quite disciplined for a company that's been listed as long as we have, and at the development stage we are, just 250 million shares on issue, pretty solid cash balance at 5 million. We have very supportive brokers. We recently made some changes in that area, and it's working very well for us. I kind of find it difficult when people drone on about their boards for 5 minutes, but what I will say here is these are serious people. I have real adult supervision. 17 projects developed from this stage to operations by Robin and Paul alone. Robin, chair of the Goldfields Gruyere Steering Committee. Paul on the board of Greatland Gold, but one of the senior execs at Sandfire. Colin, 28 years, I think, at Newcrest, and currently on the board of Ramelius. Serious people who do not lend their names and do not oversee projects which are not real and not moving forwards. Keith, our chairman, former chair of Deloitte, over $1.5 million invested of his own money into this company. So I usually do a bit of a Q&A. I think it breaks things up a little bit, and I'll start with an easy one, but trust me, they get a little bit more challenging. We're located 6 hours north of Adelaide. We're surrounded by Carrapateena. Oak Dam West, Olympic Dam, Prominent Hill. Just down the road, you've got Barton Gold also speaking here. Great development project. And Hillside, Hillgrove. Why does this matter? This matters not for neurology. We have over 1 million tons of contained copper equivalent on the tenure. This matters because we're in a place where mines get built. South Australia is extremely experienced in this area. Fantastic place to be working. And this is, in my opinion, the best place on the planet to be developing a mine right now. No point being in a good place if you haven't got the assets to back it up. We have 3 open pits, 1 underground. Average mine grade of copper globally is about 0.57%. Our open pits, solidly over 1% in the production plan, the production target. 1.7, 1.8, 1.9% copper equivalent. And I unashamedly use copper equivalent because the Carolite processes beautifully. It's not locked up in the way that cobalt often is in this country. Great thing about open pits is they provide revenue whilst you're building your decline to your flagship project, which is 400 meters underground. Now, I know we got famous about 3 years ago for a hit in the basement at 800 meters. None of what I'm talking about today involves that deposit, the deeps. This is all the shallower stuff. So even the underground is only at 400 meters, which, believe you me, is a beautiful mining depth. 40 million tons at 1.9% copper equivalent. The mine plan currently optimized about 32 million tons at 1.8. Really solid, globally comparable mined grades. So you can see here our inventory. And I'm going to pause a little bit and talk about the market. Not for long. I always have a rule, never trust a CEO who stands on stage and spends a third of the speech talking about the market. But in this case, I'm going to break my own rule a little bit. One of the joys of these conferences is that you get to talk to shareholders and you get to know what they're looking for and what they think. And I will tell you here and now, just based on the ASX, based on the discounts to net present value, and it's not just us, this applies to many great projects, the discount to net present value right now is historically enormous. Coda is currently trading at an 98% discount to net present value. Why? Well, the first is the fashion is against development projects. There's this perception that they can't move through because of the lack of capital. Nick talked very eloquently about where they're getting their capital from. I'll summarize at the end of this with a little bit more about that ourselves. I'm told that drilling is the life. Drilling is where the excitement is, and drilling is, don't get me wrong, exploration, discovery is the lifeblood of success. But we crunched some numbers, and last year, 92 companies presenting. The average return overall was 15%. So if you invested $100,000 in all the companies presenting, you would have the princely sum of $115,000 this year. That's about a Vanguard fund return, right? So what we're looking for are the big 10-baggers in exploration, but there was only 1 out of the 92. 1 5-bagger, 10 doubled the money. So how are you going to pick those? Well, I can't comment on that because I'm not running an early-stage exploration company. What I can comment on is what I look for. The development companies, and not just Coda. I'm making a very strong case for all of the development companies. We've got resources. We have scoping studies and pre-feasibility studies signed off by competent persons, if done properly, and they should be. Every sentence in that scoping study has been verified back to a statement backed by fact, backed by a competent person. You've got a net present value, you've got an IRR. It doesn't have to be found, there's no exploration risk. Depending on the stage, there are other risks. So a little bit of what I'm going to talk about for the rest of this speech is really how we are approaching the de-risking of that, because the prize for picking the right projects and for going on that journey as you remove that enormous discount. As I say, Coda is trading at an enormous discount to net present value. But it's not just us. Every single one that I looked at, decent projects, are trading at huge discount to net present value. So what is a net present value? Well, generally in this space, it is the value of the project at FID, so at the point you commence development, is how we usually pick it, including the payback of capital and including the cost of that capital, including the risk. There's the value of the project. So when you see projects with $500 million US dollar NPVs trading at a fraction of that, or 800 million in this case, you see an opportunity, but only if they de-risk it correctly. So do that, I'm going to tell you a little bit more about how we're de-risking this. We have the right ingredients: location, the geology, 93% indicated, advanced processing flow sheets, mining, and environment. So let's start with the mining, a question asked of me by actually someone who's presenting here this week, but a very experienced mining person. The ore body looks very flat, like a coal seam. Kind of what's the confidence in the processing? How are we going to do that? Well, as I said, great location. You can see this surface of the moon stuff. Unless the sheep unionize, we're not going to have a lot of community challenges developing this mine. Underground, 400 meters, you've got ME Bluff, our flagship deposit. You can see it here being mined in the wonderful Verify software. This has been put together by Mining Plus, independent world-class consultants. Yes, it was a challenge at the start. These tabular ore bodies are unusual in Australia, but in Africa, in Central Europe, they are very, very common. The world leaders in this in South Africa and also in Poland. We went seeking the right expertise and we found it. There's one thing that doesn't keep me up at night. It's the future mineability of this. The open pits are the open pits, I will add. They're relatively simple, they're shallow, they're high grade. Copper cobalt. Again, this can be challenging. And there is no doubt that if it was copper gold, our lives would be a lot easier at Coda. But our challenge is also a huge advantage. This isn't locked up with iron sulfides. This is carolite. This is your Poland, Germany, DRC Zambian style of carolite. It processes beautifully. Let me tell you a nice catalyst, something that we're really working on at the moment. You see that section there on the right of the screen, flotation and Albion? That's about $170 million Aussie of capital. One of the first things we ever looked at when we got involved with this project was whole ore leaching. If, and it is an if, so we're working on it right now, we've had some technical, intellectual, chemistry level breakthroughs that we're now testing. If we can remove that section of capital, still going downstream, and replace it with some poly tanks, they don't cost much, I assure you, then the opportunities there are wild. Huge reduction in CapEx. We're targeting a huge recovery improvement as well. Current recovery is about 80%, 82% across the thing. That's okay, that's good, it's world standard, but obviously there is mathematical and real room to improve. So we're targeting improved recoveries as well. So there's a huge catalyst there. We're working on it. I'm waiting on results at the moment. We haven't put out much to market. This is a watch this space. It's a risk, but it's only a risk in the context that if it doesn't work, you're still back at a standard, vanilla, well-understood flow sheet used all over the world, and those are the economics, which I'll talk to now. That carolite also helps the economics because it makes us eligible for future Made in Australia credits, which, with the Labor government getting back in, means that's pretty secure now. So what are the financial metrics? $1.2 billion pre-tax, 802 million Aussie dollars post-tax. It's what I call peer comparable. Those who were paying attention 20 minutes ago will probably remember. But many, many very excellent projects have these sort of 30 to 35% IRRs, solid paybacks, financeable CapExes, and we did this at 0.68. As Nick said, you know, the current spot prices really help. Current FXs really help as well. Production, good, solid, mid-size, tier 2 kind of development project, 27,000 tons per annum. One of the reasons why we're also friendly in copper, we all get on and we all support each other, is because we know that you're going to need a lot of Codas and a lot of the other development projects to replace the fact that nearly 80% of the world's copper is produced by about 20 companies. Huge concentration at the top end, those mines are depleting. We need these style of projects for the future of copper. And this one, I think if people understood how challenging some projects are to develop, they would maybe value things differently. And again, we really have huge advantages here. Sovereign risk, it's South Australia. It is, in my opinion, the best place in the world to develop a mine. Heritage, The traditional owners, wonderful people, they've been on the journey through Carrapateena. They're used to mines, pro-mining, provide a huge amount of skilled labour. Environment and community, as I said, unless the sheep unionise, we're probably pretty good on that front. The closest town is Woomera. The next closest town is Port Pirie. An infrastructure like you wouldn't believe on this site. Absolutely phenomenal levels of infrastructure. Huge power. The water desal pipeline that's planned in South Australia goes past our front door. The road goes past our, Stuart Highway goes past our front door. All right, just to wrap up, just a couple of minutes. Let's get real. How do we remove that risk discount? You've got the kind of ChatGPT written. It wasn't written, but half of these slides are the same, right? It's an innovative board. Yeah, everyone's got that. Experienced board. Yep, cool. Quality asset. Well, otherwise you wouldn't waste your time standing on this stage. What's the spark? Well, the spark for us is the stage. The spark for us is what we've done to de-risk this project, what we're still doing, some of the very real work in the area of metallurgy, but generally moving this forwards. What's it going to take? We're going to need the right funding deal. One of the hardest things about my job is that often so much of it happens behind closed doors. You can't tell people stuff that's ongoing based on continuous disclosure rules. The amount of work, thinking, and effort that is going into making sure we get the right path forwards, and make no mistake, I believe we will. Your decision. Do I believe in the development projects, which are so unfashionable at the moment, taking such a discount? Do I believe this will be a mine one day? I certainly do. Do I trust in the management team, and in our case, a team that's 5 times the resources, developed mining plans, processing plans, and that processing was hard. When we got involved with this project, the recoveries were woeful. They're now well solidly in the 80s, and we're targeting higher. Do I believe in that team to be able to deliver the next piece in the puzzle, which will be the right, because you can do a funding deal, trust me, but the right funding deal that will deliver value for shareholders? I believe we can. I believe we will. And when I get back off the stage, I'm going to get back to doing that. So thank you very much. Come and see us at the booth. Appreciate your time. Check out our podcast, codaminerals.com/updates. And I look forward to meeting all of you and talking to people, and questions always welcome. Thank you.